The more actively you have been following crypto in the last weeks, the more likely it is that you're down on your position. Crypto is a game of moving money from the impatient to the more patient. So if you're invested in AI coins, if you're invested in meme coins, then very likely you are down very heavily. Now, if we take a step back, if we have a look at the macro picture and we try to figure out at what point in time does it actually make sense to get those risk on investments, and when does it make sense to rather bet against the euphoria, then there are some systems that used to work pretty well in the past and that might still continue working in the future. And since Bitcoin has been around for the longest time and we've got most data, we've got also the best price models around Bitcoin. And that's why it's good to study the Bitcoin cycles in more detail. Now, not all of those models work perfectly, but some models are more useful than others. And when Bitcoin goes up, then of course the altcoin market tends to go up as well. So understanding the cycles is essential to understanding when to buy very risky altcoins as well. But here's the thing, the dynamics around crypto change over time. And so sometimes those models also stop working. For example, have a look at this chart. This is Bitcoin's long-term price history together with the 200-week moving average. In the first years of Bitcoin's existence, most people thought that if you just held Bitcoin for at least 4 years or one halving cycle, you'd always be in the profit because Bitcoin gets more and more rare over time. And so the price should be rising every 4 years. And so we've got this 200-week moving average, so roughly 4 years. And historically, the price was never below that moving average. It used to be a very, very nice floor up until 2022. This is when the model suddenly stopped working. And then the big question is, what should we do, right? If suddenly the model says the absolute floor should be at $24,000, but we go all the way down to $16,000, $17,000, are you still buying when a model like this is actually breaking? And because of issues like this, because models can stop working, it's important to look at many of them, but to also understand what they stand for and how stable they actually might be over time. Because here's the problem with the 200-week moving average. Over time, the return is diminishing, right? So there's a diminishing return effect. The percentage changes go down over time, at least the increases. The decreases though, the bear markets, they don't go down as much. Yes, this is a 90% drop, this is an 85% drop roughly, and this was a 75% drop. So it does go down to a degree, but the magnitude of those bear markets doesn't decline as quickly as it does the positive return during the bull markets. And that's why in the end, we went below that 200-day moving average. It's not anymore the absolute floor. By the way, currently that is at 44,600. And again, historically, we had been below that quite a bit. So Bitcoin could potentially fall below this again if history is any indication. Here's another model that I believe is outdated. It's a model of hopium. It's a model hoping for the Bitcoin price to continue rallying massively from one halving to the next. It's the stock to flow model, or in other words, how rare is Bitcoin and how much might that rarity then correlate with higher market caps. The idea is that because Bitcoin's new supply gets cut in half every 4 years, that the market cap should almost 10x every 4 years. In other words, we should get close to 400K in the next few months. I don't think that's realistic, because if we also just look at the past, we used to overshoot by almost an order of magnitude, by almost a 10x, then we tended to overshoot less and less. Now we barely reached it in the prior cycle. So it seems like the forward projections are too optimistic. And again, right, if we get another 4x in 2029, we'd be at 4 million. I'm not sure if that's at all reasonable. And so the models that I find most interesting are actually the ones that give us some kind of a trading range. So where Bitcoin is trading between high levels and low levels, because based on that trading range, we can then be rather risk on or risk off. We don't have to put in all our money when we are at the bottom. We don't have to sell everything when we are at the top, but we can adjust our weighting in the portfolio, risk on versus risk off, depending on where we are within the range. And so we have seen first attempts of this over here, for example. This is the Bitcoin Bitcoin rainbow chart. So it's a regression model that tries to give us an idea whether or not Bitcoin is currently cheap or expensive. And of course, we should be buying whenever the price is closer to the bluer area, and we should be selling when it's closer to the red area. Now, the reason why I like models like this is because they can give us also a hint of how well they work. This particular model, I do not necessarily like the given trading range. And that's because, again, in the early days, it tended to underrepresent how much Bitcoin could rise. And in the later days, it tended to overrepresent the upside potential. So we didn't hit those upper ends in 2021, but we did overshoot them massively in 2011. And so this gives me the impression that this curve should actually be flatter, right? That we should rather not hit the red area anymore, and that this definitely overestimates how high Bitcoin can go. Here's a better approximation of a similar approach. So this is the Bitcoin power law. So we've got a model price that's in orange, that's the fair price. We've got a floor price and a ceiling price. And yes, the ceiling again did not hit in 2021. It's not a perfect approach, but the bottoms, they do align relatively well. Now currently we are somewhat close to a fair price. The upper ceiling is a bit above 400K. The lower floor is a bit under 40K. Now, the big advantage of crypto over any other market is that we've got more data. Most markets just provide us with price data, maybe with trading volume data, but we don't really know what are the long-term holders doing, what are the whales in the market doing, what is the smart money doing. But with Bitcoin or with crypto in general, we can actually have some insight into this. And so what we see over here are different price forecast tools using on-chain data. So CVDD, that's the green line at the bottom, that's the coin value days destroyed. So this is going up whenever the long-term whales are moving their Bitcoin, when they are destroying coin days. So if you're holding 10 Bitcoin for 2 years, and after 2 years you decide to move them, you're destroying 20 value years. If you don't have as many Bitcoin and you're trading more actively, you're moving the coin value days destroyed much less. So this is a measure of long-term holder activity. And again, the long-term holders tend to move their Bitcoin during a bull run, right? So they take profit when Bitcoin is going up. And that green line used to be a very good bottom indicator, right? In the past, we have pretty much always bottomed out in a bear market at the green line, and currently that green line is at $32,000. This is where I believe it makes sense to go very, very much risk on. We are still very far away from this price, but it's good to have a reference, right? It's good to know what in the worst case could happen, because then we can also actively manage our risk, that then we still have some money left that we could use to buy the bottom, because that's fundamentally the problem. If you have no idea where a potential bottom in the Bitcoin price could be if we enter a bear market, and let's say Bitcoin goes down, and the question is, when should we actually start deploying our liquidity, and how much of the liquidity should we deploy? If we don't have any idea where the bottom is, we might already buy everything at 60K, and we don't have any more money to then buy more at 50 and at 40 and potentially at 30K. And this is of course no guarantee that we are going to bottom out at 32K, but at least historically it worked to a degree. And at least if we buy at those levels, it's likely that at some point we'll go above this again. Please don't give those models too much credit, right? Again, the 200-week moving average used to be the perfect floor in the past as well, until it didn't. But again, even if you bought at that point in time and you just continued holding for a bit, yes, you had to wait for a few more months, but then you got bailed out after a while. And something similar might happen for CVDD, or we could even bounce directly off that level. It's a good buying price at least. If 32K is the perfect buying price, I don't know. What I also like is the top indicators. Now, they're not perfect by any stretch of the imagination, because for both of those indicators in a bull market, we tended to move quite steeply up with all of that trading volume in both metrics. So we could have already sold at $500 when Bitcoin actually went all the way to 1K. Or we could have sold here at $60 when it then subsequently went up to $200. And even for the delta top, we didn't even hit that delta top even at the end of 2017, when we went all the way from $200 to 20K, right? This 100x rally. So it's by no means a perfect indicator, but at least it gives us us some kind of a feeling when times might get heated. It seems like recently it's getting harder and harder to hit these tops. We did hit it in Q1 of 2021, right, where we didn't have that much more upside potential. And it's still good to have it at some kind of a reference price. And now the ceiling is at 200K. I think selling at 200K and maybe even at 170K or at 160K is really no real sin. I think it's okay. Even if Bitcoin afterwards does another 50% or another 60% on top of that, that's fine. The risk to reward isn't really worth it. And hoping for models like this to become true again and seeing Bitcoin at 700 or 800K anytime soon, I think it's just hopium. This is why some people buy at those times, right? They hope that the Bitcoin price goes to those levels, but that's when we have to be contrarian. That's when we have to make the hard decision that most people don't want to make. Now, I always like to use reference prices. I always like to look at where is the market in aggregate currently at. Because when we buy an asset, we always look at the current price relative to our purchase price, right? If we are currently in profit, we might consider taking some of that profit, maybe for consumption, maybe to allocate this to another asset class. If we are currently in losses and we still believe long-term in the asset, we might just keep on holding. And so this behavior by every individual investor can also be aggregated towards the whole market, as in what is currently the average entry price for all the market participants. Are market participants currently in profit or in losses? And when they are in losses, especially for Bitcoin, right, the hardest of the monies, they might not sell that much anymore. And that might be a good buying opportunity. Now, there are two of those aggregate prices that I like to look at. The first one is the realized price. So this is the average cost basis of all of the Bitcoin holders. And whenever we had been below the realized price, it tended to be a very, very good buying opportunity. The realized price over time is, of course, going up. And it's currently at $43,000. So quite a bit above the coin value days destroyed. But again, this metric doesn't show us the absolute bottom. It rather shows us when the market in aggregate is in losses and when selling pressure tends to subside. And so if you buy at 43K, we still might go down another 5K, another 10K. It's definitely in line with what happened in the past as well. But it's definitely also a good idea to buy at these levels. Because again, nobody knows for sure where the price is going, and the risk to reward is definitely quite nice whenever we are below. Besides the realized price, there's also a slightly modified version of this, and that's the long-term holder realized price. So we don't look at the average cost basis of the entire market, we just look at the long-term holders, and they tend to take profit a bit slower. That price tends to be a bit lower, but still in all of those bear markets, at the end of all of the recent bear markets, we always came below that long-term holder realized price. And here the story is even a bit worse. The long-term holders have a realized price of $25,000 roughly. This is, at least in the past, how bad the bear markets developed for Bitcoin. Will we go again that low, below 25K? I don't know, but at least it's okay to be mentally prepared for this. And so that's then how we can fundamentally approach this, right? We can start buying at around 50, 40K. We can then add more once we go, say, to 35K. And we should still be able to even withstand at those price levels drawdowns to up to 25, maybe even 20K. So we should not start levering up our position massively just because we bought at 35K. There is still some risk. Nobody knows where the price will go, but at least those models give us some kind of a range, and this does help us with risk management. In general, we want to buy the altcoins whenever there is very little attention on crypto, when trading is very low, when very few people watch YouTube channels on crypto, when nobody wants to see anymore in their portfolio because prices already, especially in the altcoin market, went down by 80, 90, maybe even 95%. Now what we see over here is the trading activity of short-term holders in Bitcoin relative to long-term holders. So long-term holders are holders between 1 and 2 years, and short-term holders are up to 1 week. And whenever the short-term holders make up a lot of the trading activity in Bitcoin, or in other words, when the short-term tourists come in, that's when we want to sell, and we want to buy when the short-term tourists have all exited. That's when we want to get in. And the nice thing about this indicator is that it doesn't give us 100% clear bottoms and tops. It simply just tells us in general where we currently are. And we can just use this as a reference point, right? We can be over allocated to BTC whenever we are in the green, and we can have as per tendency a bit less allocation when we are in the red. And how much you adjust your allocation to Bitcoin, right? If you move to say 1% portfolio allocation when we are at the top, and maybe to 50% portfolio allocation when we are at the bottom, or if you do this a bit less aggressive, right? Maybe 5% at the top versus 10% at the bottom. The degree to how much variability you put in your portfolio with those models is obviously up to you. It depends on your risk tolerance. But having some kind of an approach how to balance a portfolio based on the risk metrics, I think makes a lot of sense. Here's another metric that I very much like to look at. So this is very similar to the realized price. This is the net unrealized profit and loss. And again, when the market in aggregate is in net unrealized losses, that's when people tend to not sell that much. When they are in net profit, they tend to sell. And currently, the market in aggregate, believe it or not, the Bitcoin investor in aggregate is still in net unrealized profit of 50%. Chances are when you're watching this video that you're already in losses, that you're not in profit. Again, because most people that trade very actively, they tend to just have the profit and loss of the short-term holders, and they fluctuate much more. The long-term holders, they are long-term in the profit because we are still up a lot compared to the prices, say, just a few years ago. Crypto, or the market in general, is a mechanism to move money from the not so patient to the more patient people. If you can afford to wait for low prices, and if you can then ride out those low prices until we see a recovery, then you're part of the winners. But if you're trading with all the short-term tourists, if you just learned about crypto because the video got recommended to you via the algorithm, or because traditional media talks about crypto, if that's how you get into BTC when prices are high, because everybody gets excited about the new all-time high in Bitcoin, then you're probably not on the winning side. And so today doesn't look that different. Most altcoins are down today. When we look at the average altcoin in the top 100, it's down minus 1.8%. And that's happening while Bitcoin is down less, only 0.7%. When we look at the performance this week, again, most altcoins are down. The top 100 are down by 7.5%. And again, while Bitcoin barely moved, Bitcoin just went sideways. And this is a pretty broad market sell-off in the altcoins. It's not just the AI coins. It's not just meme coins. Yes, we do have meme coins that get sold off. For example, here, cat themed. That's one of the categories. But we also have technical altcoins that get sold off, like the DEX aggregators and the modular blockchains. So this is a very, very broad sell-off. Assets that performed phenomenally a few months ago are now getting hammered the most, right? For example, Gozeus Maximus. This was a meme coin. Then here, AI Rig Complex, Fartcoin, all those things lose quite a bit. The same is true for the virtual protocol ecosystem, right? So this is now the base chain. It's Solana that's losing money. It's also the base chain that's losing money. Virtual itself in the last week went down by 32%. Again, while Bitcoin barely moved. And so it's very hard to estimate where the Bitcoin price will go 1 week from here or 1 month from here. And with that as an extension, where the altcoins will go. But it's nice to see these reference ranges, right? It's nice to see at what point in price is Bitcoin definitely cheap, and say at 25K, it's definitely extremely cheap. However, things that are not that hard to predict is actually what's happening with Bitcoin relative to the altcoin. So we did have our meme coin frenzy on Solana and on the base chain, but even during that time, Bitcoin as a fraction of all of crypto tended to go up. So this is a 1.5 year chart. This shows the Bitcoin dominance, and Bitcoin as a fraction of all of crypto went from a bit over 50% to currently 61%. And when we zoom out a little bit, in the past, this tended to peak at around 70%, a bit more than that. This is when the altcoin rallies actually kicked in. I think it's very likely that we are going to continue to see a rising Bitcoin dominance. I think we will continue to see how the largest altcoins on various chains, for example, here Solana, will go down. Or here's the same on Ethereum, right? It's all red. And so when we tend to see mainly red in most places, Doesn't make sense to rather try to get the odds in our favor, right? We could simply just buy Bitcoin, that tends to beat most assets, but we can also bet on the Bitcoin dominance continuing to rise. We can bet on most of those altcoins doing worse than Bitcoin. This is what I personally do in this market. I currently bet on altcoins doing poorly. It's not that straightforward to figure out where Bitcoin will go, but is it that hard to predict where this chart will go? It's not that hard, right? This is Balancer relative to Bitcoin. So this is an altcoin that has very high token inflation. That token inflation gets sold off regularly. And so we've got a very constant underperformance and we can make money with that. I have started betting on this altcoin to underperform Bitcoin since the middle of 2023. And within 1 year, this altcoin tends to do worse by roughly 70% relative to BTC. This is 70% pure alpha. Why not simply just take that kind of compounding? Why always try to get the 10 or 100x return when we can compound with significant capital quickly? Because that's a problem with meme coins, right? Meme coins are super risky. They only work in specific times in the market. And if they do make a return, they might do a 10x, but it might only work out for maybe 1 out of 10 bets. And that's the problem, right? If 9 out of 10 bets go to zero, that then also means that we can't just bet $10,000 or $20,000 on a single bet. But when we've got something like this, right, a chart that tends to underperform Bitcoin very consistently, and again, because of fundamental reasons, because of token inflation, at the same time, a lot of altcoins behave like this, then why not do that? Why not just bet more money and have proper return than buying a few lottery tickets hoping to get rich? I think if you got burned by this market, if you're currently down, if you're not part of the investors that are still in 50% net unrealized profit, then it's probably time to change strategies, right? To learn new approaches. And because betting on falling prices isn't that easy either, it also has some risk. You need to know what kind of assets to bet on. You need to know how to structure this within a portfolio that you don't get liquidated. You need to know the mechanics, how to actually do this, borrowing and lending, and do this safely without getting hacked, etc. Because all of those things aren't easy. I have made dedicated tutorial videos on the topic. So this is part of the premium membership of this channel. It's a bit harder, right? It's not just the fancy content that works well on YouTube. This is skill development, but it is worth proper money. It is worth proper alpha. Over the last 3.5 years, I have made an alpha over buying and holding Bitcoin of 1.9% per month. And again, that's not the 100x returns that you get promised in the meme coin market, but you've already tried this, right? And this is not the market to be betting on those risky coins. So feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first week and I'll refund you 100%. There's really zero risk for you. Of course, I also share my own positions in premium. So if you want to know what kind of things I short and when I get into a position, when I get out of a position, that's all shared in premium as well. The link is down below, thebitcoinstrader.com. Looking forward to seeing you over there, or also looking forward to seeing you here on YouTube, right? So feel free to subscribe and feel free to also give this video a like. It helps the channel grow. See you next time. Cheers.